Netflix is down again. It was down on over 35% yesterday. Now it's down another 3.5% today. And I'm smiling because I was just reading some of the comments I got on my last Netflix video, and we're going to get to those. But a bit of an overreaction, I think, in my opinion. So let's go ahead and pull it up on the screen. Let's go through some of this stuff together. So again, I'm pulling it up on the Yahoo Finance and Google Finance because my personal trading platform, I can't pull it up for you guys. So Netflix down 3.5%, and even in after hours trading, it's still going down. Now, if we look at it, look at year to date, we talked about this yesterday, down 63%. That's a lot, but does this really mean you should still buy it? You know, it doesn't. So that's what I'm going to say right there. It doesn't matter that it went down 35% yesterday, another 4% today. That shouldn't be the basis for why you buy something. The dip creates the opportunity, okay? That's what we're looking at. So whether or not you like Netflix or not, that's what you have to look at. You have to go back to the fundamentals, see what's going on with the business, read the annual report, read the quarterly report. Those are the things that you need to do. We're going to go through some articles first, and then I'm going to pull up the quarterly and the annual report, which I haven't completely read. I said I was going to read it yesterday. I got through some of it, and they're different. It's just different from what you're reading on the headline versus what you're necessarily going to pull from the numbers. But before I do, I want to point this out. Even with guidance, and some companies provide guidance, some don't. Even with guidance, management doesn't always know what's going to happen. So even if management is saying the sky is falling, it doesn't necessarily mean that's what's going to transpire. They could just be looking at something that happened to them that day, so maybe they were a little bit more negative than normal. So you just have to take it with a grain of salt is the point that I'm trying to make on that. So let's go ahead and pull this stuff up, and we're going to go through it. So we looked at that. Over here, this one chart. I thought this chart on Yahoo Finance that I saw from this article, one chart shows how bad things have gotten for Netflix. So this chart is just showing the average views. It's like the click-through rate on videos. It's the same thing. So you're showing a decline. They're showing a decline on Hulu and Netflix, but they look pretty equal. Now, this chart is a little bit misleading to me. And the reason it is because it's showing a percent decline. Just think about this. Do you think people are watching more TV now than 6 months ago? I mean, the pandemic is opening doors, so people are going outside more and they're doing more stuff. So it could just be one of those types of trends. Even if we compare it to Netflix's previous views, I don't think it really matters because I think each are independent. So I look at this, it looks negative to me, but I don't think that you should be looking at it quite as negatively as the headline. One chart shows how bad things have gotten for Netflix. I don't think things are quite as bad. I don't think they're great. Of course, the stock price has gone down. If you're going to look at the stock price in the headlines, you're going to think the sky is falling, but that's not necessarily the entire case. And then we see this. This was kind of shocking to me that Bill Ackman dumps his stake and New Constructs predicts another 50% decline. I don't know anything about New Constructs, but Bill Ackman dumping all of his shares after this massive decline. Usually veteran investors don't make knee-jerk reactions, and I don't really see the guidance being as bad as everyone thinks it is. And go ahead, let me know in the comments down below why you think it's so bad because of these projections that they're going to have. That's really the biggest one for me is their guidance of losing another 2.5 million subscribers in the coming quarter. I believe it was a coming quarter. I just think it's unfounded. Barron's reported the same thing. Bill Ackman dumps Netflix stock months after buying it, and I think he lost something like $400 million. And it says here he bought 3.1 million shares. So that's a huge hit. Sure, you want to say cut your losses, but I don't know. It touched down on about 212 yesterday, and I think that was still the low today on the day's range. So the day's range was so it went right below 212, 211.52, and the 52. So that's the 52-week low, 211.52. Can you believe that? $700.99 was the high, and it's currently at 217.71. It's unbelievable. It's a huge hit for the stock price, but I think it's unfounded. If you thought it was worth that much prior to this and that report didn't come out, then I just don't see how you get your math with how much was the volume yesterday? I don't know what the volume was yesterday, but I think it was like 130 million. Today it was 53 million, and their average volume was 9.6 million. So hugely overtraded from the average volume. Again, doesn't mean one way or another, because for every buyer, there is a seller. Every seller, there's a buyer. So let's go ahead. Go to Netflix.com, go to the bottom, go to the investor relations, because this is the stuff that you should look at before you make an investment decision. And I'm going to come back to that. So the page looks like this, the SEC filing details. And I was just looking at the 8K. I already have the 10K and the 8K right here. So if we look at the 8K, this first paragraph, in my opinion, kind of sums it up, how people think. And I highlighted 2 sections right here. So it says our overall growth has slowed considerably. I don't really put too much emphasis on slowing of growth, especially in just a single quarter, because there is a reason for it. And the reason to me isn't, I don't know, it just doesn't seem, they had a lot of success and their market penetration is extremely high. And in order to grow even further, it's just going to make it that much more difficult. They've had tremendous market penetration to date because this is the first quarter that they've had negative subscriber counts. But I think that if the war in Russia didn't occur, that would be positive. And I don't think we would have gotten this violent of a reaction. And who knows, maybe management would have changed their tune or how they delivered it. It's possible too. But look at this last sentence. Together with our strong profitability, we believe we have the foundation from which we can both significantly improve and better monetize our services long term. That seems pretty positive to me. So start with the negative, end with the positive. Everybody remembers the negative. So that's what the headlines that you're seeing right now. And this is the chart, if we look at it, which is interesting to me. Because here you would think, going back to it really quickly, this chart is showing Netflix compared to Hulu. And it looks like they're on the same playing field. But they're not. They're not. Look at this. Share of total U.S. TV time. I mean, yeah, sure, this is just the U.S. But, and I don't know if those other numbers were just the U.S. or not. They might have been. I don't know. You can go look. It's on Yahoo Finance. 6.4% of the market share is going to Netflix, and 3% is going to Hulu. So again, it's just positioning. Whether or not you're talking about in net numbers or percentages, I think is a big deal. And then to go from market share from May 2021 to February 2021, they increased the market share. So, I mean, yes, by only 0.4, but they increased it. So it had to come from somewhere. That means they gained more market share than someone else got. There's no other way to say that. Here, I highlighted the Russia's invasion of Ukraine. I have another section highlighted on the war in Ukraine, Russia versus Ukraine. But here's also something that a lot of people are talking about that I find kind of interesting. People are super negative on this part. Another focus is how best to monetize sharing. The 100 million plus households using another household's account. This is very well known. Headlines have caught it. And what's interesting about this is Netflix is kind of aware of it. I didn't know that before looking at any of this stuff. The stock price going down and then looking at the fundamentals. I wasn't aware that they were truly acknowledging that families are sharing. Families are sharing, not just household, from household to household, not within the household. So 100 million plus households using another household's account. So that just seems like an easy opportunity for them to fix that and to monetize it. And I think people just think, oh, the prices are going to go up. No, they're baking into their current price, but you can only do that so much. And right now they're kind of at that limit. So they're like, hey, we're charging what we think we can charge, but we've got to lower that price if we want to get more market penetration and increase that subscriber count or find new ways of gaining market share. Here's what I talked about yesterday, and here's where it's written in the 8K. So this has to do with the war in Ukraine, and paid net additions were 0.2 million. So that's 200,000 compared against our guidance forecast of 2.5 million and 4 million in the same quarter a year ago. The suspension of our service in Russia and winding down of all Russian paid memberships resulted in a negative 0.7 million, 700,000 impact on paid net ads, excluding the impact paid net additions totaled 500,000. So 500,000. So it would have been just another quarter. Again, not they didn't meet expectations, but they still are growing. So I don't know. If you're just making money, if your business is growing, your business is growing. Just because it's not growing at the same rate, you don't have to sell out of it and just abandon ship. I mean, it's still a tremendous company. They gained 500,000 subscribers, and they have 222, I think, 222 million, 220 million. That's nothing. A couple 100,000, again, projections. So the management said that they're going to lose 2.5 million moving forward. Scroll down a little bit more. We can get some more information from these from this report. Let's see if we can see the breakdown. I don't know if the breakdown is here. I think it is. For the first, they're using 17 billion. Let me flip over to this report. 17 billion per year. You might have already known this. This is a well-known fact even before I looked at this report. And they were spending head and shoulders more than any other content creator, whatever you want to call it, platform, into it. They're amortizing it over a 4-year period. And I was going to pull it up in this video, but I just couldn't find it. So basically, they're taking those costs and breaking it up over 4 years. But then it's just free cash flow after that. So I think that is a tremendous opportunity long term, is that they've gone over all these years. Netflix started as basically buying and just or renting content and then putting it on their platform, and now they're headed more into the space of, hey, we need to create our own content. Some of it's because it was taken away from them, but that's an asset, and that could have a positive impact long term. And I invest long term. I don't buy or sell stocks to make $1 in a week or a month. I think that's not very smart to do. And I'm sure there's a lot of people watching this video who like doing that, and that's okay. Whatever way you want to do it, you go ahead and do it. But 58% of the revenue gets reinvested. That is pretty good. A lot of people might be looking at that saying, well, no, then our profitability is down. Yeah, but what about your future growth and your future prospects? It might be slowing, but they're still going to have an asset that they can use for years to come, because I'm still watching shows that are old, so not everything is going to be brand new. So let's see what else we can pull out of these reports. Let's go back to the 8K for a minute. And I wanted to see the breakdown because there was an opportunity that I believe in Asia that they were the only area so they saw growth in Asia and not so much in the US. And they had 75 million subscribers in the US currently. So there still could be possible market penetration. Maybe that's in the annual report. In market penetration, let's go ahead and look at this report right here. Where do we have it? Oh, here we go. So we have the United States at, there we go, 74 million average paying members. And this is kind of interesting. I like to look at this. I would like some more numbers on this to see more of the trends. That's something typically I would look at. And again, I know a lot of people out there will say, well, what's the point of looking what happened 5 years ago? Because I just want to see if there's what happens in their transitions over multiple years. And if there's anything like expense-wise they're taking and burying in any particular year. And that's usually a problem. But you can uncover that with looking at more data. You can't do it in just 1 year. They might have some inventory or some shows or just some things you can uncover. It just makes it a lot easier if you dig into the numbers. So Europe, Middle East, and Africa. Let's see those numbers. So we're going from still an increase, but look at this as a percentage. And I think a lot of people look at these percentages and say, wow, that's just really bad. Let's highlight it. 80% decline in percentage paid net membership additions. So they had an 80% decline, but that's just new members. You're just slowing up your rate. Again, I don't know. I just think it makes it look really bad when you see an 80% decline in paid net membership additions, and especially given what the pandemic, I mean, everybody probably ran out. If you didn't have a Netflix subscription, you probably got one from your friend or you got one yourself. So they had an influx and a massive amount of growth in a short amount of time. And then all of a sudden they're not moving at the same rate. And again, everyone is up in arms and abandoning ship by the droves. So I think they're just jumping on the bandwagon because they don't want to be left holding the bag. They don't know where it's going to end. So, and it might go down more, it might go up. It's hard to know. In the short term, it's just very, very difficult to predict these kinds of things. And then if we're looking at, where is Asia? It was the last one, I believe, right? Yeah, it just got cut off on this page. So if we look at these numbers here, we could see the average paid memberships, and that's quite a jump. I mean, from 2019 to 2021, we've doubled. So there's quite an opportunity around the world to continue to get market penetration. If you just watch YouTube, if you just watch Netflix, you're seeing more stuff in foreign languages, like Squid Games, right? A lot of people watch that. So I think you're going to see more of that as they try to get more market penetration around the world. So I think that is a positive thing. And just the way technology is going, the distribution to all these different countries is just going to get a lot easier. So I don't know. It's overblown. I don't know necessarily. I'm not saying buy or hold or sell. You can put those in the comments and we can debate it. But I just wanted to kind of point out interesting things that I'm finding in these reports, or at least that I think are interesting. And that's what you should be taking a look at. All of these numbers. Let me know in the comments down below too, if you're going through this stuff, if there's something that jumps out to you that is not being said anywhere else, because that's the stuff that I would like to look for, is to figure out like, okay, like for example, this article over here that's showing the viewership declining. I just need to see that in more context because I don't think this sums up all the problems that are going on with Netflix. I just think that there is shifts in viewership from time to time, and I don't think that's a bad thing. So I don't know. I just wanted to go over those few things with Netflix because you guys asked me to go over this stuff. So I will do more of these kind of videos. Let me know in the comments down below. Give it a thumbs up, subscribe. Let me know what you think. We could look at other stocks moving forward. Just let me know what you want to take a look at, and I will pull them up, and we can go through the annual reports and the quarterly reports and see what we come up with. Hopefully you enjoyed it. If you did, be sure to subscribe and leave your comments down at the bottom.